My name is Brad Barnhorst. I'm investment counsel for Canon Capital, and today I'd like to discuss our selection criteria for choosing funds on our recommended list. At least every quarter, our investment committee gets together to review our list and change any recommendations or consider any new funds that we might want to throw into our portfolios to make sure that we are giving the best for our clients. Now, it is not just as simple as picking the funds with the highest return. We have to make sure that there's a balance between the return captured and the risks entailed. Of course, we'll be looking at it from a portfolio view, so we have to look at each component of that portfolio and think about how it reacts with the other components. We also have to think about how each piece reacts in different market conditions. We have to think about each piece relative to its benchmark and competitors. We have to take each piece relative to fees and the fees that are involved to make sure that the return after fees is justified. We need to make sure that each fund is doing what it says it's going to do. Consider things such as style drift. For example, if a fund is saying that they will invest in large value companies, but the way that they are getting their excess return is by having a disproportionate amount of investment in smaller growth companies, well, then we need to make sure that we are treating it more like a blend fund and comparing it to the appropriate funds in evaluating how it's going to fit into our overall portfolio. We start this process with some external verification. We use Morningstar, FI360, and other reports to make sure that each fund is robust over time in various market conditions. We then think about the overall portfolio allocations. We'll think about any tactical repositioning that we want to do based upon views of the macro environment. And of course, once the portfolios are designed, then it's going to be up to the investment advisors to determine with their clients what best meets their needs based upon the client's needs and expectations. In this way, we make sure that we minimize risk and get the highest return possible for each client. We do routinely evaluate our portfolios to make sure that the portfolios are in line with our targets, both in returns and in risk. And in doing so, we have been very pleased to see that we tend to be very conservative when it comes to our risk pursuing. We want to make sure that our clients aren't taking any risks that they don't intend to take. And that is something that is a philosophy of Canon Capital and one that I am proud to uphold.